What time horizon do you have in mind that you can remain constructive on? 6 months, 12 months? What is it, Bob?
Yeah, it is literally 6 to 12. I think the near term is a little more treacherous, but we don't have the signs of a recession. Unless we have a recession, it's hard to see a big down move in the market. So I think we're going to tread water with a lot of volatility in both directions as we sort out what used to be a pattern that was almost all positive. Now it's just a bit more mixed. For example, inflation is not all transitory. I hope everybody finally gets a hold of that one.
Yeah, but I love what you have in your note, Bob Doll, and that is you talk about technology-related disinflation, the advantage we've had from technology. Are you suggesting that's over?
Not at all, Tom. I think that will remain a powerful force to keep inflation from getting really out of hand. But when you look at wage rates, that's the most insidious, hard to get out of the picture inflation, and it's very prevalent now. That on top of just go shopping and you see what the story is, exacerbated by the supply shortage you folks covered just a minute ago.
So how important, Bob, is the jobs report that we're going to get on Friday to you?
I think it's very important. The Fed seems almost unilaterally focused on the jobs front and kind of pushing inflation to the side, not worrying about it. I think at some point, as the employment numbers continue to improve, inflation will come front and center for their fight.
All right. So the idea of the jobs report, would you say that it's more important than earnings? Because a lot of people are saying that it almost matters less than earnings at a time when the big question mark is not the Fed, which has said it's very dovish, but rather margin pressures and how much they're exacerbated by the supply chain disruptions.
Yeah, for the economy, employment's all important, but for the markets, it's absolutely about earnings. And as you talked about earlier, there are a lot of question marks about third quarter earnings. For sure, we're getting a deceleration from the unsustainable record second quarter. The question is, will companies be able to sell? What's the supply shortage going to mean? How are they dealing with price pressures? I mean, even in the second quarter reports, you saw a big increase in the number of companies commenting on the pricing problems that they're having, raw materials, et cetera. So lots of cross currents here. My guess is the earnings season will be more mixed.
So, Bob, going forward, what is your expectation in terms of what you will change in your portfolio? Because right now you are bullish on stocks, considering the fact that we're not going to get a recession. However, is there some scenario that you see as potentially likely that could change that view?
You know, so the mainline story is that cyclicals and value are cheap and have some tailwind relative to growth and momentum and high PE stocks. And if inflation and interest rates creep higher, you know what part of the market struggles with that. That's the high PE side. What would get in the way of that is we saw problems that the economy was slowing more than people thought, that this unbelievable pedal to the metal, both monetary and fiscal policy is not having the effect it's been having. I think that will continue to carry the day.
Bob, I would guess you have seen 4 times OMG margin contraction, margin pressures. We're all going to die at the sort of the income statement. How do you respond to that if you're an investor?
So I think that those margin issues are for real and to be paid attention to, particularly in light of profit margins seem like quarter after quarter have come in better than expected and reached unbelievable heights, all-time highs. That's probably not sustainable in the long run, Tom, and therefore I think a long-term look at earnings has to have a profit margin picture that's a little below where we are today.
The worries about these margins into this quarter. Bob, I'd love a playbook from you on what to buy on weakness as this earnings season starts. I think that's got to be the focus right now. If you're on an investor committee and you're thinking about these issues, you're looking around and saying, well, everyone's talking about the same thing right now. Where do I want to fade this story? How do I want to fade this story into earnings season, Bob? How would you like to do that?
So into weakness, the first part of your question, I want to own what I think is going to work best over the next 6 to 12 months. And that is cyclical, value, down cap, international. I think they're the places where the puck is going. So financial stocks, for example, you've seen them as interest rates have crept higher, do a lot better than you might think in the decline we've seen in the market from its highs of just a few weeks ago. So that's the kind of area I want to jump onto. I have a lot less valuation risk there than I do in some of the higher PE growth stocks that have done so well for, it seems like, forever.